Welcome back to the Finance Shark YouTube channel. Buying a house can be an exciting and emotional process. If you feel like you're ready to buy a house, the first question you're likely to ask yourself is, how much can I afford? Before starting your home search, you want to understand the ins and outs of home buying. This will empower you to make decisions that are the best for your family and your wallet. So in this video, we're going to discuss getting a mortgage. What do you need to buy a house? The video is going to be amazing, so make sure you stick to the end. Before starting the video, be sure to smash the like button and subscribe to never miss out on any of our videos. Why do people need mortgages? The price of a home is often far greater than the amount of money saved by most households. As a result, mortgages allow individuals and families to purchase a home by putting down only a relatively small down payment, e.g. 20%, and obtaining a loan for the balance. The loan is then secured by the value of the property, in case the borrower defaults. So, when you've determined what you can afford, you can figure out how much you want to save for a down payment. To avoid private mortgage insurance or PMI, you'll need to save at least 20% of the home's purchase price for a down payment. Being willing to buy with less of a down payment gets you into your new home faster, but putting more down lowers your costs, says Casey Fleming, a mortgage advisor with C2 Financial Group. The right decision for any particular person or family is highly personal. The amount a mortgage provider will lend you will depend on various things, including the size of your deposit, your income, and your credit score. If you're buying a property with other people, the lender will also take their finances into account. Shop around with at least 3 lenders or a mortgage broker to increase your chances of getting a low interest rate. You should definitely shop around for a mortgage, Fleming says. It doesn't take much to get licensed to sell mortgages, but it takes years to understand how the products work and how they impact borrowers. It'll save you heartaches and, most likely, money in the long run. The next step is an agent. An experienced real estate agent can save you time and money by helping you find your dream home and by negotiating with the seller on your behalf. Keeping in touch with local estate agents could increase your chances of finding your ideal home, as agents sometimes contact registered buyers before listing a property online. You should contact several real estate agents and ask to meet with them for a conversation about your needs before choosing one. Someone with knowledge of an area can also tell if your budget is realistic or not, depending on the features you desire in a home, Kruger says. They can also point you to adjacent areas in your desired neighborhood or other types of considerations to help you find a house. After an expert agent, the next step is making an offer. Understanding how to make an attractive offer on a home can help increase your chances the seller will accept it, putting you one step closer to getting those coveted house keys. Your real estate agent can be a tremendous resource here, providing you with comparable sales information and any intel about the seller they might have gleaned from the selling agent, like if they've already found a new place and are extra motivated to sell. You may also want help from a real estate attorney. In some states, a lawyer is required to be part of any real estate transaction. Once you find the one, your real estate agent will help you prepare a complete offer package, including your offer price, your pre-approved letter, proof of funds for a down payment — this helps in competitive markets — and terms or contingencies. Adding in a personal letter to the seller can also help your offer stand out. Offer accepted? Congrats! Now you've got just a few more steps to go. You'll also likely write your first check at this point. Now, you'll need to think about what type of mortgage you want to apply for. For example, a fixed-rate mortgage or a tracker, and how long you want to spend paying your mortgage off, known as the mortgage term. 25 years is the norm. You can see how much your monthly payments would cost based on different interest rates, loan amounts, and mortgage terms using our mortgage repayments calculator. The mortgage is a paperwork-heavy process, so get ready to do a lot of uploading. Here's what you're likely to need. 1. W-2 forms from the past 2 years, possibly more if you've changed employers. 2. Pay stubs from the past 30 to 60 days. 3. Proof of other sources of income, including documentation of any gift money. 4. Federal income tax returns from the past 2 years. 5. Recent bank statements, usually for the last couple of months. 6. Details on long-term debts, like car or student loans. 7. ID and Social Security number. Once your mortgage application is complete, you'll go into underwriting. During this process, the lender makes a final decision on whether to give you the loan. It's basically making sure there's not anything about the deal that's just too risky. Underwriting includes digging deep into your finances, so you may need to come up with even more documents. After application, the next and very important step is insurance. It's vital that you have buildings insurance in place on your new home from the day you exchange contracts. In fact, most mortgage providers will make this a condition of lending. This is because you are legally bound to buy the property from the moment contracts are exchanged. So, if the building were to be flooded or burned down before the day of completion, and you weren't insured, you wouldn't be covered. A home inspection helps you get an overall picture of the property's mechanical and structural issues. The home inspection will help you determine how to proceed with the closing process. You might need to ask the seller for repairs, or you might decide to back out of the deal if you have a contingency in the contract. You can get recommendations for home inspectors from your real estate agent. But also, be sure to do your own homework before choosing one. Depending on your contract and state of residence, you'll generally need to complete a home inspection 10 to 14 days after you sign a purchase agreement. As a buyer, you're usually responsible for paying the home inspector. And while the fees can vary, you'll pay an average of $300 to $450, according to Angie's List. Though some items, like prorating property taxes or HOA fees, will already have been addressed in your offer letter, you may still have some items to negotiate before closing. Your ability to negotiate can hinge on what kind of market you're facing. In a strong seller's market, it can be difficult to get concessions, since the seller can simply go to their next offer. But if it's an issue that will come up with any buyer, for example, a necessary repair that will get flagged by any home inspector, you may still have leverage. How to get started. Enlist your agent's help to negotiate with the seller. Ask for the seller to either do the repairs or give you a credit at closing. Completion often takes place around 2 weeks after exchange, but this is flexible, and you can agree with a convenient date with the seller. On completion day, the money will be transferred to the seller, and you can then collect the keys from the estate agent and move into your new home. You've finally made it to the last step. 3 business days before your closing date, the lender will provide you with a closing disclosure that outlines all your loan details, such as monthly payment, loan type and term, interest rate, annual percentage rate, APR, loan fees, and how much money you must bring to closing. At the closing, you, the buyer, will attend, along with your real estate agent, possibly the seller's agent, the seller in some cases, and the closing agent, who may be a representative from the escrow or title company or a real estate attorney. This is also the time where you'll wire your closing costs and down payment, depending on the escrow company's procedures. Getting familiar with the standard closing documents ahead of time can make the closing process less nerve-wracking. Your lender must provide you with the closing disclosure at least 3 days before the actual closing. You can compare it with your loan estimate to see whether and how any closing costs have changed. This will let you know how much total cash you'll need to close. On or close to closing day, you'll do a final walkthrough with your real estate agent. You'll probably be buzzing with excitement, but make sure to check that everything's as agreed upon. For example, that all the appliances that are supposed to be included in the sale are still there. It's been a whirlwind of emotion and seemingly endless paperwork, not to mention that you may have just written the biggest check of your life. But now, you're getting the keys to your new home. Congratulations! You did it! What is your opinion of the mortgage process? Let us know your opinion in the comment section below. This was all for today. Hope you liked the video. Do not forget to subscribe to our YouTube channel. Stay safe, and we will be back soon with another video.